This is the Asia Trade. I'm Shery in Tokyo.
I'm Haidi, Stroud-Watts in Sydney. The top stories this hour. Nvidia shares pair gains in late traders as quarterly revenue forecast beats estimates, reaffirming the AI build-out boom. CEO Jensen Huang saying computing demand is growing exponentially. Asian stocks are set for gains after a positive session on Wall Street as a bond rally stalls. The Bank of Korea is expected to keep rates on hold today. Also ahead, Qantas profit climbs as more fuel-efficient aircraft replace the carrier's ageing domestic fleet. We speak later with the CEO, Vanessa Hudson. And the chief of Lotte Group's drug-making unit tells us exclusively about the opportunities they're seeing from a shift in production away from China.
We'll be watching tech suppliers across the Asia session, anything related to AI, given Nvidia's, of course, bullish outlook. And we have already seen the Nikkei gaining for the last two sessions. And you can see right there, futures pointing to the upside. We could see more upside for exporters if we see more yen weakness, trading at that 156 level after we heard that Prime Minister Takaichi had nominated two BOJ board members that were seen as dovish. In fact, it's a big central bank day here across Asia, as we have the Bank of Korea also holding a key rate decision, expected to hold the rate steady at 2.5%. Perhaps a little bit of a different story to what we can expect from Australia, and perhaps more RBA tightening to come. That's a speculation after we saw inflation beating estimates. So do watch out for the Aussie dollar because it has seen significant strength against all G10 currencies. But of course, a big story today topping the agenda, Nvidia's bullish outlook. We're talking about the biggest company in the world. And it's not only its $4.8 trillion valuation. The reason that's important, of course, is at a critical time when there's been a lot of jitters about the state of AI spending, software stocks, AI disruption. Of course, right now we have seen that revenue forecast for the first quarter really beating expectations, even those lofty expectations, which has sent the stock higher as well. Some calling this impressive across the board. Let's actually discuss all of this with Bloomberg Tech co-anchor Ed Ludlow. So Ed, take us through the numbers.
Yeah, it's $78 billion plus or minus 2% in the April quarter, right? Crucially, that does not reflect or include any data center revenues from China. And the reason that I bring that up early is that straight after the earnings dropping, they filed a 10K that explained that in the month of February, without giving a specific date, the US government did grant them some licenses to export H200 to a certain list of Chinese companies with restrictions. So, you know, maybe the market views that as potential upside to come. They are kind of tracking ahead of this bigger $500 billion forecast for Blackwell and Rubin systems through the balance of this calendar year. Crucially, margins still impressive. And, you know, right now they're in a situation where they're ramping Blackwell. That is aiding the bottom line. The cash flow generation is very strong. And then this week alone, they started shipping the samples of Vera Rubin systems so customers can test, on track for the back half of this year. A time of transition where they go generation of technology annually, but it's not really impacting them. They're also managing inventory and capacity well, so have visibility on their ability to supply for several quarters to come.
What do we make of the stock move, Ed? Because obviously it's been a pretty contentious time in this space. Does this dispel some of the concerns over the AI scare trade, particularly after that Centrini report?
Yeah, like in the blog and in the chat room, I don't know if we as a newsroom really agreed in the moment what caused the gain to pair. There was a moment where the CFO Colette Kress was saying they recognize growing competition from the Chinese domestic chip players. Some of which have IPO'd recently, as you guys know, and there is a worry that they could compete with Nvidia in markets, not just in China, but ex-China as well. The stock kind of made a move then. Then there was a question to Jensen Huang about whether he believed the capital expenditures figures of the hyperscalers, which in the quarter was still more than 50% of revenue, will continue to grow. And the way that Jensen Huang answered was, well, we think cash flows will grow. Because remember, like, this is the trade-off right now. The hyperscalers keep giving us these big capital expenditure numbers for the year, but it is impacting cash flow. And so his argument is, this is working. Tokens are profitable. All of the code that's being generated from Nvidia compute platforms, the investment was worth it. The stock's up 0.8% now. It had been up 4%. Whether the street buys it in the morning, let me go to sleep, come back, and we'll see.
And I mean, we could have you here forever, but let's just get to some of the chips, of course, from Nvidia, because you mentioned the Rubin chips upcoming, but of course we had Blackwell as well, which really pressured costs for Nvidia last time they were out, gross margins, but also the H200 chips for China. So much to talk about.
Yeah, they tried to explain that away, though. You know, that right now Blackwell's in ramp. That's aiding the bottom line. What the analysts ask is, what happens when you're doing both, selling Blackwell into the market, and then your biggest customers have to upgrade to the Vera Rubin? The CFO basically said both are possible at the same time. They fully expect those biggest customers to upgrade to Vera Rubin, and the words that she uses, there is no confusion about that process, a lot of confidence. So I guess in the sell side and the analyst notes, we'll see if that is a sort of roadblock right along the way, jumping from one platform to the next generation platform.
Bloomberg Tech co-anchor Ed Ludlow there with a wrap of those Nvidia numbers. And let's get some more analysis. Maribel Lopez is a principal analyst at Lopez Research, joined us now. Maribel, let me just get your sort of initial thoughts to these numbers and what the market might be sort of feeling at the moment.
Nvidia continues to surprise and delight the market. It was a solid set of earnings, and more importantly, they had a very confident outlook for how they were going to sell more AI chips and data center product going forward. And I think we were all looking forward to seeing, is that going to be a thing? Could it be any bigger than this? And they basically said yes.
What do you make of the sort of muted reaction, particularly as we're seeing, off the highs of the day for the share price? Do you think that is just, in terms of how steeply this particular company is priced? What do you contextualize it with the recent sell-off that we've seen in this space?
Yeah, I think if you went to yesterday, we had a tremendous amount of AI fear in the market. I think if you come to today, there has been a bit of optimism put back into the market. Make no bones, though, a company like Nvidia is very highly valued. But what we can say from the fundamentals of a business is that they will be able to sell everything that they can build for at least the coming year. So whether or not we will be able to see upside in the stock is unknown. But whether or not they will be able to continue to perform and sell the product they said they're going to sell, I have confidence that they can do that based on the demand from the hyperscalers. And also, we're finally starting to see enterprise AI inferencing demand hitting, finally.
And does it matter then that perhaps other parts of the business didn't do that well, like gaming, for example, that was once their bread and butter?
I think at this point, it wouldn't matter how much gaming they could sell. Gaming would never be able to outperform data centers for AI right now. We are in an AI capacity crunch. This is one of the reasons why they're so confident that they can sell older products and newer products to the same customer at the same time, because the customers like the hyperscalers need to have different price performance levels for different customer workloads. So they can take high end and low end depending on what type of customer they're selling to. And right now, basically any product Nvidia has will be sold. So the real question is, do we see a credible threat from any other chip provider right now? We were talking a lot about AMD recently. We've been talking a lot about Chinese chip providers. These are actually pretty long-standing architectural decisions that people are making. So realistically, Nvidia has a long tailwind for at least the next several years of commits that have already been placed with them. So the question is, will we start to see more activity in the space? There has to be more than one. It can't just be Nvidia. But the question is when and how that translates.
Even CFO Kress mentioning Chinese competitors are making progress. What about Chinese clients? How important would they be for Nvidia's future?
You can never count the Chinese market out. It's a huge market, a tremendous opportunity. But right now, it's a very frothy geopolitical opportunity. So I think that one of the things that they tried to do was really talk about the other opportunities that aren't necessarily China, but that are nation and government specific. Sovereign AI has actually been a very big discussion globally. How do we build our own resilient AI infrastructure? And I think they're on point when they say that is something that they will be able to benefit from over the next 1 to 2 years as all nation states try to decide how they create their own independence in AI.
Maribel, you were surprised, as many of us, how much traction the Citrini post got, right? Do you think the market sort of ran away from that? Do you think it sort of hit on an existing dread that perhaps was already there? And what do you make of it in terms of, I guess, separating the companies that are going to be sustainably growing going forward and those that might be caught in the froth?
One of the things that we're seeing happen right now is that the tech stocks aren't all created equal in terms of how they're going to create money. So there's still a tremendous capex spend for cloud companies, for model companies. So if you're the person that's making chips and hardware, you're selling to a lot of people, regardless of how much or how little margin they're making right now, right? So then the second wave of that is if you're on the software side, we saw SaaSmageddon last week. And one of the things that was interesting about that was to say, well, what's the real fear there? It's not that software as a service is dead. It's whether or not something like Claude Code and those models can impact their future revenue growth. So what we're seeing happen is a lot of dynamic nature in terms of what is the impact on various industries by AI coming out. So I still think we're going to see hyperscalers do well because that's where you're going to buy the tokens from. We're still going to see hardware and chip companies do well because they sell into data centers that are going to service that demand. The model companies, we're still trying to figure out how much money they're making. Anthropic actually put out some good revenue numbers, but all of the model companies are spending a lot. And then the real suspect numbers right now are around the SaaS market and what impact AI will have on that. Not that people are not going to buy SaaS, but how much they're going to be able to charge moving forward. What's the revenue upside?
Maribel Lopez, really good to have you with us with your insights. Principal analyst at Lopez Research with, of course, everything Nvidia and, of course, how this AI build-out could impact different sectors of the economy. What we're watching is also potential energy demand impact, right? I mean, there are analysts saying that power demand could triple from data centers by 2035. President Trump now convening tech executives to sign pledges committing to pay the electricity bill for data centers. The White House says the meeting will happen next week with representatives of firms including Amazon, Meta, Microsoft, and Alphabet expected to attend. While the promises wouldn't be binding, administration officials think that formal public pledges could bring accountability. Heidi.
Subscribers, of course, Shery, can also turn to Bloomberg on the terminal for more on Nvidia's fourth quarter earnings. TL Avigo is your function on the latest updates, plus a commentary and analysis from our expert editors as those questions from analysts start coming in. Take a look at what we're watching when it comes to the start of trading here in Asia, and we've got about 12 minutes into the start of the staggered open here in Australia, already seeing some gainers, and of course it is all sort of more or less driven by these earnings numbers. Qantas, a record profit as we see that fleet renewal, I should say, starting to really pay off, I should say. Still strength when it comes to loyalties as well. We're seeing some gains really being reversed, though, when it comes to Qantas Airways there. Linus was one that was a miss, the first half net income missing estimates for that period, and we'll be seeing sort of a little bit of downside potentially for that broader mining sector as well, but still quite a lot of optimism there when it comes to broader rare earths, given that supply-demand story. BlueScope is another one that we're watching there, calling the revised takeover bid thus far from Steel Dynamics as inadequate. They're still open to a deal, a little bit softer, down by just 2%. More interestingly, perhaps, is across the bond and FX space as we continue to see that reaction to the beat on Aussie CPI that we had yesterday. The Aussie dollar also against the backdrop of dollar weakness, seeing the outperformance that we saw nearing that 3-year high in the session. The dollar gauge, though, broadly underperforming. We see Asian currencies as a whole at about that 16-month high. Coming up on the Asia trade, we get a major jet deal being secured, but trade tensions continue to linger. Germany's Chancellor meets with China's president for the first time. Details of those discussions are next. This is Bloomberg. take a look at the pretty positive setup when it comes to Asia. That rekindling of AI hopes with the Nvidia numbers, really a broad theme today, and that will play out when it comes to these tech-heavy names in Japan as well as Korea. We also have a Bank of Korea decision to contend with. Here in Australia, we're seeing gains of about 0.5%, some mixed messaging when it comes to earnings. Good numbers out of Qantas, in fact, a record profit there, but we're seeing that stock tracking lower and some of the mining names also weighing as well. Nikkei futures just ticking into negative territory there. The weakness that we've seen in the yen will continue to be a theme, and S&P futures looking mildly positive. Of course, we're still digesting the sort of reversal, the pairing of gains that we see in Nvidia as those results continue to be passed. Let's get some more from the Bloomberg MLive strategist, Brendan Fagan. Brendan, so do we see this sort of continued respite? Because it does feel like perhaps market consensus, if you can call it that, is perhaps a reaction to the Citrini post was a bit overdone. Does Nvidia sort of fix some of that?
Well, you'd certainly hope so. The numbers were obviously great. The guide was great. The question is just a matter of whether it sticks or not. If you look at the Nvidia chart, we're sort of breaking out at this 197 level of a multi-month range. So it's sort of make or break time and whether these numbers have any follow through above 200. If that's the case, then you can see a broader index rally into the 7,000 level on the S&P 500. But that's sort of what we've been waiting for in this rotation that's taken over the last few weeks. But going back to the Citrini report, I found it a little bit interesting. I had a few people messaging in and messaging into the MLive team more broadly that was it a question of the report causing the sell-off, or were people just looking for an excuse to sell their tech holdings? So it's been an interesting week, but these are good numbers, and so far it seems constructive.
Yeah, especially if you look at some of the software stocks, right? I mean, we had Salesforce as well, and they disappointed when it came to their forecast. So we'll see if the upside lasts. But when it comes to Asia, we have so many suppliers in this part of the world. And of course, the Kospi, for example, topping 6,000 with the likes of Samsung, SK Hynix, and all of those chip makers leading the gain. So what can we expect on this side?
Well, I would definitely say, and we say it here in the Americas, is that it seems like equities are just one big trade at the moment. And it's been this weakness in the chips, in the software names. So seeing a bit of a bounce here definitely causes signs for optimism, especially looking to feed through into the Asia session. So looking for some green on the screen in Asia.
How much further upside do we see when it comes to this dollar weakness and Asian currency strength story? Obviously, some of it's idiosyncratic for the Aussie, for example, on these bets that the RBA will have to move further.
Well, I think you have to take it on a case-by-case basis. We're seeing down in Australia a real resurgence in inflation, and you have a tight labor market. So it's a backdrop that spells more hikes from the RBA. So that makes sense. But I think the theme in 2026 is central bank divergence. You're seeing different paths everywhere. You're seeing it between Australia and New Zealand. You look at Aussie-Kiwi as an FX pair, the divergence there and the one-way traffic that has been. But you see it with the BOE. They're turning dovish. The Fed is expected to cut. So everybody's on their own path, charting their own course. And as it relates to Asia, it's a little bit interesting with the yen. We have this wider range that we seem to be carving out. It seems like the yen just can't get out of its own way. Takaichi now nominating 2 dovish members to the BOJ. But also on the flip side, we have Scott Bessent, who stepped in. That has now come out that he initiated the rate check a few weeks ago. So we have this soft ceiling, but it also seems we have this soft floor that comes from the Japanese side. So it just seems like we're finding our feet in a bigger range, especially in the yen.
Yeah, I mean, the Aussie, in fact, at the strongest against the yen since 1990. Brendan Fagan, really good to have you with us, Bloomberg MLive strategist there. And of course, we're also following the yuan. We have seen an incredible rally in the Chinese currency. We continue to follow everything geopolitics. Germany and China now expressing optimism that they can overcome their differences on trade and geopolitics to forge stronger ties. This comes as Germany Chancellor Friedrich Merz wraps up his 2-day visit to China today with visits to German and Chinese industries in Beijing and Hangzhou. For the latest, let us bring in our chief North Asia correspondent, Steve Van Engel in Hong Kong. So, Steve, what's being said?
Well, obviously, Germany and China have a deep yet complicated relationship that, of course, when Friedrich Merz became chancellor last May, in the lead up to that, in his campaign for the chancellorship, he essentially, lobbied for German industries to invest less in China. He has a strong affinity towards the United States. But again, with the upheaval in global trade over the last year, I think he's taking a more pragmatic approach towards towards China right now. Yes, there are deep differences between Berlin and Beijing over Russia's war in Ukraine, and Merz clearly will be bringing that up, or has brought that up already with his talks yesterday in Beijing with Xi Jinping and also Premier Li Qiang. But also on the trade front, there are trade differences, no doubt, with the exporting of excess industrial capacity into Europe by China. And of course, Merz is there going to be meeting or going to a Mercedes factory out in the outskirts of Beijing today. Mercedes under threat, no doubt, in China, but also at home with the prospect of Chinese EVs, cheaper cars from China coming into the European Union. So there are a lot of issues to resolve. But again, he is taking a more pragmatic approach, it seems, and both sides are saying that they're going to work, that they're optimistic that they can work to overcome those differences. But that being said, in our Bloomberg reporting, we talked to one official from the German delegation saying this is not the beginning right now of a German-Chinese new spring.
So you would know, Steve, plane orders often an easy kind of deliverable that looks good out of these state visits right to China. Does that mean we have more orders for Airbus?
Well, that's what Friedrich Merz is saying, that essentially he's been told by Xi Jinping, if not Li Qiang, that China is looking to order or place an order for about 120 airplanes right now. We don't know which models. You're seeing the A321 here. They, of course, make the A321 in a final assembly plant in Tianjin, also the A320. But again, about 120 aircraft could be coming as a result of this visit by Friedrich Merz. Keep in mind as well, Donald Trump is going to China at the end of March, early April. I spoke last month to the U.S. ambassador to China, David Perdue, who also confirmed to me that that is going to be one push by Donald Trump to get Boeing aircraft order. There hasn't been a Chinese aircraft order from Boeing, with Boeing, for many, many years. So, again, this is a hotly contested market, no doubt. China needs airplanes, and they're playing, obviously, Airbus off Beijing. But we'll have to see if that comes to fruition, both for Boeing and also Airbus.
Chief North Asia correspondent Stephen Engle there in Hong Kong. Well, do check out the Bloomberg Video Hub. Subscribers can explore live streaming, news and interviews all on our Bloomberg TV shows, documentaries, reporter analysis and more. Check out bloomberg.com/videos. This is Bloomberg.
Take a look at how commodities are trading. We are seeing gold and silver, precious metals, just largely steady. But after gains that we saw in the previous session, we, of course, are reacting to geopolitical tensions around the Middle East, not to mention U.S. tariffs as well. We continue to watch oil on those geopolitical tensions. We are headed towards the U.S.-Iran nuclear talks. The Trump administration also imposing sanctions on entities that support Iranian oil and weapon sales. And also we're watching natural gas futures, which are Haidi still higher because people are concerned about more cold weather coming in March that could drain inventories.
Shery, is there a Bitcoin sort of bull case that's being quietly built at the moment? Of course, we know that the major cryptocurrency has been cut almost in half since the October high, but we're seeing sort of some institutional scaffolding built around it still being sustained. So if you take a look at what we're trading at the moment, Bitcoin off by just about 1%, but still it has been approaching that 70,000 level somewhat gradually. We are seeing some signs of risk appetite returning to the broader crypto space. We had sort of 3 sessions of losses, stocks posting modest gains, that broader risk sentiment being improved with Nvidia. It is obviously something that remains to be seen as to whether that optimism spreads through to crypto as well. More held in the Asia trade. Take a look at some of the moves as we're watching when it comes to this earnings season. It's a little bit of sort of mixed messaging, if you will, because on the one hand you have Qantas announcing that profit record, I should say, and the renewed fleet really starting to pay off dividends. The sort of energy efficiency story really being quite positive with that record profit coming through as well for the first half. 5.1% was the climb on earnings there to 1.46 Aussie billion. There we'll be speaking to the CEO of Vanessa Hudson a little bit longer, who does expect strong travel demand to be sustained as well. Having said that, we're seeing that reversal when it comes to Qantas Airways, down over 3%. The broader market up by 0.5%. We're seeing some very strong gains when it comes to lithium stocks. Then still that reaction to the suspension in Zimbabwe, they're affecting that supply and demand situation. Lynas Rare Earths, that was a miss, but we are seeing that stock up by 3.5% there as well. Let's take a look at these results as we head into the final stretch of earnings season here. Paul Allen is with us, and you would expect Qantas to be doing better, Lynas perhaps to be reacting in the opposite direction.
Yeah, indeed. We'll get to Lynas in a moment, but Qantas, a pretty good set of numbers there, a record as you outlined, and returning cash to shareholders as well. Fuel costs were an issue. They did rise more than expected to 2.61 billion Aussie dollars, and the second half they're expecting to see that trend continue. But more aircraft on the way, 6 coming in the second half, and then another 30 over 18 months. These will be more fuel efficient. They'll replace the ageing domestic fleet as well. On the international side, we had an interesting announcement as well. There's going to be a new route, Sydney-Las Vegas direct. That's going to start at the end of the year. It'll be seasonal though, and it's going to coincide with a couple of things like, there's a big rugby league event there in the early new year in Las Vegas, the CES show as well. But a lot of focus and questions still on Project Sunrise, this long-awaited plan to fly direct from Sydney to New York and London. The latest is that is due to start 2027 with those first planes arriving later this year.
Camilla, what's been your assessment? In some ways, we've seen kind of Australia as being the haven because it's largely shielded by a lot of the AI scare trade, the sell-off there. But is that playing out in this market?
I think so. I mean, it's sort of mixed, as you mentioned earlier. We're seeing a lot of inflows coming into the banks, which had a strong result earlier in the month, in February. That sub-gauge was at historical levels. But in other ways, it's also sort of being hit hard by the tech sell-off. Obviously, that's been a big narrative that's been big in markets at the moment with fears about AI disruption. However, what we're seeing with the actual companies that have been reporting in February so far in terms of the tech earnings, they're actually quite positive. We had WiseTech's earnings yesterday. We had SiteMinder, Iris. All of these companies delivered earnings beats, which were rewarded fairly generously with a share price rebound in the market. So yeah, it's quite mixed across the board. We're seeing some haven inflows in some areas of the market that are performing better, while others are still struggling.
When it comes to sort of the broader earnings season, have you been impressed?
I actually have been. We mentioned at the beginning of February that this is the first year in a while that earnings growth is meant to return to the market, and we have started to see that earnings growth come back. A lot of that has been driven by strength in the mining sector, particularly in BHP, in Rio Tinto. Fortescue had earnings early this week, which were above expectations. So it's been quite interesting and quite positive for people watching Australia's markets to see that earnings growth return.
What's going on with Lynas? Because obviously that rare earth space is such an opportunistic one given all of the geopolitical overlay.
Yeah, it's interesting, isn't it? You think on the surface this should be a license to print money, right? I mean, Lynas, one of 2 major producers outside of China, the only one that actually makes money, and it's reflected in the market cap too. It's now bigger than Qantas, even though it makes way less. But it's China's dominance of this space which really keeps a lid on prices. That said, Lynas says that things are improving on the price front. We saw sales rise. We saw the price of its sales rising as well. So a big improvement on the $5 million or so that we saw for this period last year. $80 million for net income. Still a miss, but better than the previous half, as I mentioned. Going forward, the 2025 capex program now complete. The CEO says they've now got the assets and the capabilities to immediately benefit from this new environment in rare earths.
Bloomberg's Paul Allen here, and Australia and New Zealand equities reporter Carmeli Argana there as we head into that final stretch of earnings here in Oz. And we'll get some more on Qantas and the outlook for the flag carrier. We'll be speaking with the group CEO, Vanessa Hudson, a little bit later on. That's coming up on Insight with Haslinda Amin at 3:30 p.m. if you're watching in Sydney. This is Bloomberg.
Japanese Prime Minister Takaichi has reaffirmed her pro-stimulus stance with the nomination of 2 reflationist academics to join the BOJ board. The proposed appointments weakened the yen, boosted stocks, and pushed up long-term bond yields. Let's bring in our Japan economy and government editor Paul Jackson. Paul, so who are these 2 nominees?
Well, we've got Toichiro Asada, a 71-year-old professor emeritus at Chuo University. And Ayano Sato, 57-year-old law professor at Aoyama Gakuin. And now both are known as reflationists. So I think the interesting point here is that Prime Minister Takaichi has had a moment to show markets that she's taking a balanced view on policy by having 2 appointees at one time. One may be a very dovish figure, a reflationist, and someone a bit more central. But she hasn't gone down that path. She's chosen 2 reflationists. So I think in terms of the immediate impact on the BOJ board, I think it's going to be limited. But what this does show us is that after this emphatic landslide election victory, that Takaichi is feeling more like emboldened to stick to her original kind of strategy of boosting Japan's economy and having growth as the priority of her economic strategy.
But we saw the market reaction with the weakness of the Japanese yen, and given that we're also getting indications that that rate check that happened from the New York Fed perhaps was more an idea of Scott Bessent, will this become a problematic issue with the Trump administration?
Well, I think we can't rule out that there could be rising friction on this, and I think that you just touched on the key point there, which is the yen. Now, we know from the Fed that the order came from the Treasury to try these rate checks. So it's coming from Scott Bessent. As we know, Scott Bessent is fascinated by Japan. We also know he's got this expertise in currencies dating back from his time with George Soros. So he's keenly interested in what's happening with the yen. Now, he's done Japan a favor. I mean, after the Bank of Japan's meeting in January, you've got the yen sliding, and the US essentially gets Japan out of jail without currency intervention. He's done a favor. So how is he going to be feeling if the yen then starts sliding back towards 160? I suspect, Shery, he's not going to be too happy.
No, and even President Trump, remember before, like right now, he seems to be happy with the Japan-US trade deal, but even a couple of years back, he was talking about the weakness of the Japanese yen. What can we expect then from the Bank of Japan? Is there anything that they can do, especially with those rate hikes and going perhaps against what the administration actually wants?
Well, I mean, it's a tricky position. It's looking ever more tricky for the policymakers at the Bank of Japan with the Takaichi administration. Let's see how that pans out. The Prime Minister has been very careful in her public remarks on the Bank of Japan since she took the helm of the party and became Prime Minister. I think there's still, I think it's not likely we're going to see anything happening in March. These appointees that we've had from Takaichi indicate that she's in no rush for some near-term rate hike. So I think the earliest we can expect is April. But I think the key point is what happens between now and March the 19th with the yen.
Right now, trading at that 156 level against the greenback. Paul Jackson, good to have you with us with that context of what's happening around the Bank of Japan, Bloomberg Japan economy and government editor. We have more ahead. This is Bloomberg. I'm here in Jamshid Central, Seoul, home to Lotte Group's flagship assets. Its hotel, amusement park, shopping mall, cinema, they're all mainstay businesses for one of Korea's oldest and largest conglomerates. The group is now carrying out a major overhaul, betting on growth drivers and shedding underperforming assets. Lotte's chemical and retail businesses have been pressured by the global petrochemical downturn and sluggish domestic demand. Lotte Chemical posted another year in the red in 2025 with a $1.7 billion net loss. The conglomerate is now offloading non-core and overseas assets to shore up its balance sheet and pivot to growth. At its core, Lotte Biologics, with the group betting on its contract development and manufacturing business as a key future engine.
We're focusing on the CDMO because we have expertise in execution, and we have a history of a chemical division as well as customer-focused as well in hotel and retail business that we're well known for the last 50 years. So again, we could combine those technical and science with the customer-focused, and CDMO is the right area, and then the bio industry is also growing as well. So we feel it's the right area for focus for Lotte Group.
But because of that, there are so many other players as well, including domestically Samsung Biologics, Celltrion, and of course globally as well, as a new entrant. And you're very young, only 4 years,
Yes.
4 years, 2022 you launched.
Yes.
How do you compete?
That's a good question. We are late boomer, but I think one of the things that we could differentiate is we do have a BMS legacy facility that we purchased 3 years ago in Syracuse, New York, who has a rich history and heritage of a biological product manufacturing. So that's the differentiating factor. And then again, we cross-train from Syracuse as well as the Songdo facility that's coming online. So there's a tremendous opportunity for us to work together in cross-training and get ready for production in Songdo facility later on in 2027.
Are there any benefits to the supply chain realignment for Lotte Biologics, especially if you consider the likes of the new Biosecure Act that may hinder some of those Chinese competitors from the U.S. market?
Absolutely. We have seen a little bit of surge in terms of our candidate pool who may have used Chinese-based CDMO wanting to come to U.S. for U.S. manufacturing, mainly for clinical study in the U.S. It'll be easier from the registration perspective to have a clinical supplies manufactured in the U.S. for U.S. patients. So from that perspective, we're getting some attraction. And also for the European pharmaceutical companies, again, because of this pressure, they want to have opportunity to manufacture in the U.S. as well for the U.S. patients. So definitely we're getting some positive attractions for our Syracuse site.
When you look at the customer demographics and across regions, are U.S. clients the most important at this point? Is that the most active part?
I think so. I mean, again, generally speaking, U.S. is the biggest market. So there's a lot of big pharma companies there. But certainly there is also, strong presence of Korean pharmaceutical companies as well.
Could eventually China market also be available?
I think so, but because of the current environment, I think that will be a little bit more challenging. But we're not going to ignore it because I think China has those areas where biosimilar development they're very quick on. So depending on availability in China CDMO versus what we could deliver from the Asia market as well as the rest of the world.
Lotte Biologics CEO James Park speaking to us exclusively in Seoul. In fact, Park talked also about a potential IPO that could come in the next few years, and perhaps what a good time right now when the Kospi continues to rally. We have seen the public markets in South Korea gaining incredible ground with the Kospi past that 6,000 level. Samsung, SK Hynix really leading that charge. Korea's market cap now bigger than France's after topping Germany's just last month. And of course, a lot to do really with the strength in the tech sector. I mentioned Samsung. They just unveiled their new smartphone lineup with the Galaxy S26 as well. We do have also a Bank of Korea rate decision as well. The expectation is for a hold at 2.5%. Our Korea economist, Hyo-sung Kwon, joins us now from Seoul. Hyo-sung, good to have you with us. So we are expecting a hold. So what will you be watching in today's decision?
Yes, so the BOK's rate hold today is a foregone conclusion, but what is less clear is the signal on what comes next. So in my view, BOK will complete its shift to neutrality at this meeting. So in January, BOK cut the language of whether or when to cut further. And today, I think BOK will raise its growth outlook and also raise its upside risks to inflation. This will remove any residual easing tilt. But at the same time, I don't think the BOK will pre-commit hikes at this point.
How much of this is really being driven by computer chips?
The computer chip is the strong global demand for computer chips is powering the economy. So export data shows that the chip shipment increases more than 100% in January, and even February as well. This will boost capital expenditure and output this year. At the same time, the memory chip boom is also contributing to a Kospi rally. So the rally in Kospi will increase household wealth, which will boost private consumption as well. So this year, South Korea's economy will see recovery or improvement both in external and domestic demand.
And of course, we have seen BOK Governor Lee Chang-yong really steer the Bank of Korea the last few years, but he's actually, his term expires soon. Are there any political implications here as the president needs to also nominate the central bank governor?
Governor Lee Chang-yong's term expires in April, but at this point, his reappointment is not announced yet, so we don't know he will be reappointed or there will be a new governor, and whether a new governor will be a man or a woman, or the new governor will be someone in the public sector in South Korea or from international institution. So everything is unclear. But so at this point, so in that context, BOK, I think it really makes sense for the BOK to keep neutrality so that it can, BOK can make larger room or maximum room for the next governor to maneuver when he or she appointed in April.
Bloomberg Economics career economist Hyo-sung Kong there as we look ahead to the Bank of Korea. Of course, it's a very interesting time for global central banks with these new tariff uncertainties in particular, potentially adding extra pressure. But take a look at watching when it comes to Australia. We saw even some uncertainty being voiced by the RBA's Michelle Bullock in comments yesterday about where the Australian economy and the rates scenario is headed from here, given that we had that beat on monthly CPI readings that, of course, drove the big moves when it comes to not just the Aussie dollar in the wake of dollar weakness more broadly, but also the moves that we see in Australian bonds. We're also seeing this kind of shift of interest from global investors as well at a time of global uncertainty. Australia's low exposure to AI bets, for example. We have sort of a much smaller conglomerate of software and tech names on this market. That low exposure has been driving that interest to Australian bonds as a safe haven. Of course, also the rate hike, the first in the major world for a central bank from the RBA, robust fiscal positioning also supporting that demand for Australian debt. Aussie bonds increasingly being seen as a way to diversify US exposure in particular. Let's get you caught up with some of the corporate headlines that we're following this morning. And UBS strategists say the private credit sector could see default rates surge as high as 15%, which is 2 percentage points more than the firm's forecast less than a month ago. They expect the worst case scenario for defaults to happen if AI triggers an aggressive disruption among corporate borrowers. Warnings about private credit have been building in recent days, stirring comparisons to the 2008 financial crisis. Shares of Salesforce plunging in extended trading after the company gave a lukewarm outlook for sales growth. It sees revenue hitting around $46 billion in the new fiscal year, which was in line with analyst estimates, but still failed to impress investors. The forecast fueled Wall Street's worries that the software giant will lose out to new competitors in the age of AI, Shery.
Yeah, I mean, Haidi, Salesforce is sort of the poster child for all of those fears around AI disruption, right? So no wonder their stock actually fell about 37% just in the past year. And there was a huge sigh of relief when we actually got Nvidia's revenue forecast, right? For the first quarter sales, they're forecasting $78 billion, which beat all analysts' estimates. And even Jensen Huang in today's call really talking up the AI build-out right now, saying that the computing demand is growing still exponentially.
It's really interesting, particularly, of course, it's been a tough few days for this space, right? A lot of investor jitters, the reaction, some say kind of an oversized reaction to the Citrini blog post and how that was interpreted by the broader market. But at the moment, we're seeing perhaps a bit of a respite rally. It's interesting, though, perhaps to take a look at even with those really impressive numbers, really well above for the revenue forecast for the first quarter as well, in line with most of the most bullish projections for Nvidia, we still haven't seen that sustained gain when it comes to Nvidia's stock. We are, of course, watching to see the impact going into the South Korean session, the likes of Samsung Electronics, Hynix, and some of the other names, SoftBank as well, one to watch in the session. It's quite interesting that even the sort of supply side wasn't an issue for Nvidia. They've secured enough supply to meet expanding orders. They haven't quite finalised that agreement with OpenAI. So there's still a lot to look forward to. But as you pointed out when we were chatting to Ed Ludlow a little bit earlier, not a lot of progress when it comes to that crucial China market side of things, right? They've sort of stayed a little bit on the sidelines with progress on that.
Yeah, especially since the Trump administration has allowed that H200 chips to be exported to China, the older generation ones. But of course, will Chinese clients actually take that, given the geopolitical environment, is a key question right now. And the CFO there, Kress, now talking about how Chinese competitors are also making progress. Still ahead on the Asia trade, UBP is with us next to share its market outlook as Nvidia's upbeat forecast shows the AI boom is still running hot. And we also have Counterpoint research as well. This is Bloomberg. This is the Asia trade. We're counting down to Asia's major market opens, and it's all about the AI trade, Haidi, especially given that we saw Nvidia's revenue forecast coming in pretty bullish at a critical time when people have been very concerned about AI disruption, AI spending, while Jensen Huang really reassuring investors that computing demand is still very strong.
Yeah, and I guess the question, Shery, is really does it dispel some of these existential worries that there is, going to be pockets of froth that are building up and that not all of these companies in the AI trade space are going to be created equally, I should say, and does that sort of continued impressive performance by Nvidia change that at all? Very interesting, particularly as you see even the likes of tech stocks here in Australia seeing a pretty stellar day today.
Yeah, we'll be watching those tech suppliers, anything related to the AI trade across the Asian session. The Nikkei had already risen to a record high, and you can see right there, gaining to the upside of 0.7% early in the open. But of course, we also have that boost for exporters coming from a weaker Japanese yen. At the moment, strengthening a little bit, but still around that 156 level against the US dollar. And this really with Prime Minister Takaichi now nominating 2 BOJ board members that are seen as dovish. So those expectations of a rate hike to come from the central bank being delayed. So we had banks in Japan also under pressure in the previous session. So we'll watch out for that as a 30-year yield really holds at that 340 level. Of course, the long end of the yield is what we're watching very closely on expectations of what could happen to more spending and stimulus in the country. But as I mentioned, it's really a lot to do with the tech stocks, tech suppliers. Tokyo Electron, for example, Rakuten, SoftBank, some of those stocks that we'll be watching in the Japanese session. In Korea, of course, not surprising, it'll be a lot about Samsung, SK Hynix, which already gained more than 1% in the previous session. And the Kospi still above the 6,000 level after surpassing it yesterday. This is really huge because now the South Korea market cap is larger than France's after topping Germany's just last month, and is really to do with that chip export, the tech sector really leading the charge. And of course, that is also one of the reasons that perhaps we could see a hold from the Bank of Korea today with the rate at 2.5% as the economy there recovers, Haidi.
Take a look at what we're watching when it comes to some of these really kind of Fed and rate-sensitive groups of assets, right? Of course, we've been talking about that dollar weakness and how that's really contributed to that Asian currency strength. Broadly, we're seeing Asian currencies at around that 16-month high, and that's particularly benefited along with, of course, a stronger inflation picture out of Australia, the stronger expectation of more moves from the RBA this year, that strength that we've seen at about a 3-year high in trading for the Aussie dollar against the greenback. But also, we're also watching the Treasury space as well. The 5-year in particular is one that's quite interesting at the moment. It's really caught in this tug of war between growth and inflation woes, weighing that tension and what the Fed might be able to do it, particularly with that uncertainty overlay of what's happening with trade and tariffs as well. Also watching gold. Of course, we've seen a little bit of a tricky scenario for gold despite that weakness in the dollar, pricing it quite well, steadying as she goes when it comes to gold at the moment. That focus on not just tariff updates, but also, of course, those upcoming talks with Iran. Let's bring in Kieran Calder now, who's the head of Asia Equity Research at UBP. So, Kieran, we have this situation where, of course, all of the macro factors are still at play, ranging from everything geopolitical related to tariffs to central banks globally. But at the moment, it is really all about that tech space. What do you make of the price action that we've seen? And do the numbers from Nvidia take away the fear that clearly was dominating the trading up until now for the last few days?
Good morning. So obviously the numbers from Nvidia are a big relief as a bellwether of the AI trade, at least on the infrastructure capex build out side. Nvidia needs to keep delivering and having a strong outlook. So that's pretty positive. If you look at, over the course of this week, of course, we had this Centrini report over the weekend talking about a hypothetical scenario a couple of years down the road where we've had, the AI build out. And the implementation it basically takes out a lot of different sectors. And I think probably we've passed peak worry about that sort of scenario. In fact, if you put that report into ChatGPT itself, it really says, don't worry too much about this. This is a hypothetical scenario looking at identifying risks going forward. So we think peak fear has probably passed. And it's an opportunity, we think, to recalibrate in the names that have a decent near-term outlook. And for us, it's really the sort of CapEx and AI CapEx build out. So the names like Nvidia, as well as some of the semiconductor manufacturers, I think are a good place to be at the moment.
Kieran, how long do you think we sort of should be looking at in terms of the time frame for that separation of the sustainable gainers within that AI space and those that, clearly, particularly in the likes of Jamie Dimon's world, are something that you should be a lot more cautious about?
Well, I think the timeline is now. If you look, particularly JP Morgan, they had a mini investor day this week, and they highlighted that they're going to be spending almost $20 billion this year, about half of which is investment in platforms and AI capabilities. Big corporates, including financials, which are able to spend and implement AI, will benefit from that, and they'll be able to help their clients. And names that are a little bit more exposed, will have some work to do. So obviously, there's a sharp contrast between Nvidia results and Salesforce results. So Salesforce has a bit of work to do to adapt their business model to the new environment.
Kieran, can you at this point also tell who the winners and losers could be across Asia as well?
I wish I could. Obviously, I think that we think that the semiconductor names are an obvious place to be. So, the big ones, TSMC and Samsung, which of course have done well. We think there's some critical companies in Japan in the supply chain, which we think at this stage is also a place to be. I think it's probably too. It's difficult now to pick the winners on the implementation side. So, while software names have been really taken to the cleaners, I think it's maybe a little bit too early to start to pick through there and try to identify winners as we're still at the build-out stage.
Yeah, lots of component makers, also chemical suppliers across Japan, right, Kieran? But here we also do have the idiosyncratic story around the Bank of Japan, what Prime Minister Takaichi wants when it comes to those rate hikes. The weakness of the Japanese yen and the acceleration of the losses, is this a risk or is this just more upside for those exporters?
Well, so okay, the yen is a difficult issue for Japan, obviously. The Bank of Japan is obviously very cautious, and with the comments and the new appointments from the comments from the Prime Minister, a further rate hike is probably pretty unlikely at this point. On the other hand, the weak yen is also very problematic, especially for Japanese households, because so much of the household basket is imported. Mostly all energy is imported. Lots of food is imported. So the imported inflation is a big problem, not only for the economy, but specifically for households. This is likely to continue. And I think, exporters obviously benefit from translation of earnings, but at some point, it's just too weak for the domestic economy. She's bought herself 4 years. Hopefully, there'll be some measures taken sooner.
Kieran Calder, good to have you with us, head of Asia Equity Research at UBP. And those concerns around delayed rate hike from the BOJ actually pressured banks in the Japanese session. Take a look at some of those tech suppliers, because of course we still have sort of the optimism coming from Nvidia results, despite the fact that after hours we're seeing Nvidia's initial gains in the stock actually fading. Still, when it comes to the market reaction in the Asian supplier side of things, we continue to see broadly some upside. EBITDA is an idiosyncratic story right there, because their sentiment has been hit because of a secondary offering. So you can see the stock falling more than 2%. But the top story remains Nvidia, the world's most valuable company, $4.8 trillion market cap with a bullish revenue forecast, as discussed with Bloomberg Intelligence senior analyst Kunjan Sabani. Kunjan, so what were your key takeaways in the numbers that some analysts have put as extremely impressive across the board?
Yeah, I mean, I would agree. This was one of the, based on the last 3 to 4 earnings, this was one of the stronger numbers we have seen. It handsomely surpassed a lot of high bar for the buy side expectations, which usually is pretty high bar. There was nothing negative to find. There were a lot of positives. One being networking really surpassed expectations, so which is really good because they are now opening up their networking business beyond just their GPU, evident from the deal that they're making with AWS. On the second hand, the sequential growth in the quarter outside of the top 5 CSPs, which is 50% of the data center revenue, grew faster or at best equal to the top 5 customers. So that is really a good sign to see that the growth is not just concentrated from these top 5 spenders, but is diversifying across the region. They also stated that sovereign is now for the full year was about 30 billion. Gross margin continues to beat even at this level of ramp, which is really, really positive sign and very difficult for rest of the players to do in this environment. So really positive from fundamentals across the board and key metrics.
Why were investors so tepid in their reaction? Is this to do with Nvidia, or is this to do with the broader fears that are still, taking hold about unsustainable overspending in the sector?
I think it's more of an Nvidia story now. If you look at the last 4 or 5 quarters, despite beating consistently, usually the stock the same night or the next night has reacted negatively if you look at somewhere between low to mid single digit. So this positive reaction, even though it's fading, is sort of improvement compared to the last 3 to 4 quarters. Again, you have to keep in mind most of the story is known, right? Look, demand is strong. Everyone has priced that in, digested in. It's the world's largest market cap company. I mean, based on law of large numbers, how much can a $5 trillion company move, right, overnight? So it's a big market cap. The story is well known. People know Nvidia continues to keep getting stats. So it's difficult to move this on just based on the print.
Yeah, I mean, a story that's not known is how they'll also fare in China, given the geopolitical tensions. And despite the H200 older generation chips being allowed in, will there be uptake, right? How big is that potential? And what are you seeing, Kunjan, as you try to assess that market?
Yeah, that point is no longer sort of a big risk item for investors for Nvidia, because, again, they have digested this information. Nobody else is getting access to that market. So it's not like some competitor is grabbing that share. This would be more of an option call for the upside. If and when that market opens up, this could again start bringing in revenue in tens of 20s of billions of dollars. But again, looking at the scale, today when the company is on a run rate of 200 billion, getting to sort of 300 or more billion dollars, right? 1020 is good to have, but it's not going to kill the company, not having those revenues.
Bloomberg Intelligence Senior Analyst Kunjan Sobhani there with some analysis on Nvidia. More ahead on the Asia trade. This is Bloomberg. Take a look at what we're watching across some of these geopolitically sensitive assets. Oil at the moment, this is the picture, looking pretty steady there as we see more nuclear talks between the US and Iran, of course, coming up as a point of focus. These concerns about the potential conflict in the Middle East prompting some of the biggest producers in the region to ramp up exports. And when we talk about that export build-up, it's really the likes of Saudi Arabia and Iran accelerating their output, adding barrels to the global market at a time, of course, that we know that the US is deploying more military assets across the region as well. President Trump weighing his next steps when it comes to dealings with Iran, and that raises the stakes for flows through the Strait of Hormuz. We're also watching gold in that same context. It's pretty steady in kind of picture at the moment, not much of a big price move. Traders weighing up these tensions in the Middle East. Also the impact, as yet unknown, of new, different US tariffs on global trade as well. Well, the Trump administration has imposed sanctions on more than 30 entities it says support Iranian oil and weapons sales, ramping up pressure on Tehran amid nuclear talks and the looming threat of a US attack. Let's bring in Bloomberg's digital politics editor, Remy Verghese, for more. So there's been a lot of questions, even within lawmakers in the US, as to what does Trump actually want from Iran. Do we have more clarity here?
Well, we heard Trump say in the State of the Union speech yesterday that he wants Iran to say, we will never have a nuclear weapon. But the president has also said that he wants to have discussions on other matters, such as its ballistic missile program. And we just heard Secretary of State Marco Rubio say that Iran is refusing to talk about its ballistic missile program. And the president has also said that, he wants to address how Iran is treating its people, the protesters, and its support for proxies that have worked against the United States and its allies in the region. But clearly, lawmakers and other critics have said, what does the administration and what does Trump actually want out of these negotiations with Iran? What does it want to see in the latest agreement, in a new agreement?
So given that we're seeing the biggest military buildup by the U.S. around Iran since the Iraq war, what's the likelihood of an actual strike on Iran if the talks don't go well? And how widespread could that be? Are we talking about targeted attacks? Are we talking about an all-out war?
The possibility of strikes is something our analysts and analysts worldwide are trying to game out. And it's very clear that currently we are at very different sides here. Both sides are fairly far apart, and we're going to need concessions from both sides for there to be any progress in these talks tomorrow in Geneva. And if these talks fail, then yes, that increases the likelihood of a strike of a U.S. strike. And Trump has said that he's considering a limited strike. But a limited strike, if these negotiations fail, if that increases the possibility of such a strike, the risk of a significant Iranian retaliation is pretty significant.
Bloomberg's digital politics editor, Rami Varghese there. Let's take a look at how European futures are opening up for the session amidst, of course, all of the uncertainty going into the results of these talks, if we in fact see any sort of outcome there, as well as the global overlay of uncertainty over AI and tariffs as well. We did see in the previous session European stocks already hitting a record, largely on account of the rebound that we saw in banks. Very, very solid earnings season there. The likes of HSBC, Banco Santander, they're the biggest gainers and clearly the biggest outperformer there. HSBC up almost 8% in the previous session. So it'll be very interesting to see if the financials can hold onto those gains. We're seeing futures looking pretty positive across the board there, but the benchmark index has really scaled pretty impressive successive record highs this year. It looks like investors looking into Europe are still very confident about economic growth prospects in the region. Well, Germany and China are expressing optimism that they can overcome their differences on trade and geopolitics to forge stronger ties. This comes as the German Chancellor Friedrich Merz wraps up his two-day visit to China today with visits to German and Chinese industries in Beijing and Hangzhou. Let's bring in our Chief North Asia correspondent, Stephen Engel, who joins us in Hong Kong. And Steve, we were talking yesterday that this was going to be a bit of a delicate balancing act. How's the visit shaping up so far?
Well, they're saying the right things. Obviously, Friedrich Merz in the past has been fairly hawkish towards China. In the run-up to him becoming chancellor in May, he was even encouraging German businesses to invest less in China. And, you know, he's also been very critical, well, Germany as a whole has been very critical of the Russian war in Ukraine. And then de facto to that is essentially China's support of Russia, not necessarily in the war, but just their backing of Moscow. So there are some very tricky geopolitical issues and trade issues. You know, Merz made it clear in his meetings with Xi Jinping yesterday in Beijing, as well as Premier Li Qiang, that the growing trade imbalance between Germany and China in China's favor needs to be corrected. But at the same time, he struck a fairly pragmatic and optimistic tone with the leaders from both countries essentially in their readouts saying that they are optimistic they can strike a strategic partnership and improve their relationship despite those differences. That being said, we have one German official saying this is not necessarily the beginning of a new German-China spring, meaning that all of a sudden all the issues that this trip is a panacea for their problems. But again, trade and geopolitics are issues that these two leaderships in Berlin and in Beijing say that they can overcome, especially amid the trade chaos, if you will, around the world that was largely exacerbated last April with the launch of the Trump administration's tariffs.
Okay, at least could we expect some high-profile commercial deals, perhaps airplane orders for Airbus?
Yeah, so on the trade front, obviously, Airbus is a big one that is oftentimes associated with big state visits. So the German chancellor's there. There's indications from Friedrich Merz that Xi Jinping indicated that there could be a 120 plane order from Airbus coming from China. We don't have the details or the confirmation of that yet. But, of course, Boeing and Airbus locked in a battle for global supremacy on those orders. Boeing hasn't had a big order or any order in many years from China, given the trade differences between the United States and China. But Donald Trump is heading there at the end of next month. And at least the U.S. ambassador to China, David Perdue, told me last month that, of course, Boeing is going to be a hot topic of conversation when Trump goes to Beijing. But Friedrich Merz saying maybe 120 aircraft. We don't know what they might be, but we all know which model they might be. But we all know that planes like this one, the A321 and the A320, they have a final assembly plant, Airbus does, in Tianjin. So there could be an order forthcoming. Friedrich Merz is looking at the trade imbalances. Obviously, he's going to be going to a Mercedes-Benz factory today. He's going to Hangzhou as well. He's going to be meeting and going to a Siemens plant. He's also going to be meeting and going to a robotics factory of Unitree in Hangzhou. They make those humanoid robots. But again, that trade imbalance is going to be key. Germany and China are industrial giants, exporting giants, and the export from China of excess industrial capacities in EVs and batteries is seen as a threat, obviously, to Germany's auto industry. There has to be a balance struck there. And so it is a tricky balancing act for Friedrich Merz in China these 2 days.
Our Chief North Asia correspondent Stephen Engel there joining us from Hong Kong. And some of the other global headlines that we're following at this hour, Indian Prime Minister Narendra Modi has announced closer defense, trade and counter-terrorism ties with Israel during a rare visit. Modi told the Israeli parliament the defense partnership is essential in today's uncertain world, and both sides are working to expand trade and investment. An Indian official told Bloomberg that Modi is also expected to finalize a major order for Israeli-made missile systems. U.S. Trade Representative Jamieson Greer says President Trump will sign a directive raising his global tariff rate to 15% where appropriate. He describes the move as a way to maintain continuity with countries that already have trade agreements. The U.S. administration plans a 150-day window for additional trade investigations that could result in more permanent targeted tariffs.
So our goal with all of this is to have continuity. So we want to have the 10%, and we're looking about how to implement the 15% that the president indicated, because we want to have continuity. We want the countries, we want the companies, we want people to understand that what we were doing before, we're going to reconstruct with alternative tools, because we want to keep going, maintain the policy. We'll just have a change in the legal implementing authorities.
The Pentagon has reportedly taken its first step towards blacklisting Anthropic. Axios says it's asked two major defense contractors to provide an assessment of their reliance on Anthropic's AI model, Claude. The company has been insisting that the military refrain from using its products to autonomously target enemy combatants or conduct mass surveillance of U.S. citizens. We have more ahead. This is Bloomberg. Take a look at how tech stocks are trading across Asia. We had seen the initial optimism over Nvidia's bullish revenue forecast, but with Nvidia's after-hour session also fading a little bit, we are seeing right now the downside pressure on those tech stocks trading across Japan. Tokyo Electron, of course, semiconductor equipment maker. Ibiden also losing about 5%. It's also got some idiosyncratic news on a secondary offering, but really Ibiden is Japan's largest supplier to Nvidia. Also watch for Rakuten shares. The group says it will start considerations toward the reorganization of its fintech business, including Rakuten Bank. This is Bloomberg. Take a look at some of those tech names across Asia. We are seeing the broad downside across Japanese names in the tech sector. Everything else seems to be gaining ground in Japan, though, of course, we have a weaker Japanese yen on expectations that the BOJ may delay rate hikes, given the nominations of BOJ board members by the government that are seen as more dovish. But you can see right there that the tech names are down, fading together with Nvidia in the after-hour session. Despite the bullish revenue forecast from Nvidia, that initial jump really not being sustained. A different story for South Korean tech names. Samsung, SK Hynix already adding to the 1% plus gains in the previous session. But this market has been on a tear. The Kospi topping 6,000. Really surpassing the market cap of France, of Germany as well. But let's discuss what's happening in the tech sector, because Nvidia's earnings, of course, are the top news today, and we're reacting from all the supplier sides, component sides here across Asia. Joining us now is Marc Einstein, a research director at Counterpoint. Marc, great to have you with us. What's happening with the Nvidia stock? I mean, we heard some analysts saying that it was impressive across the board when it came to the numbers.
Yeah, I think Nvidia hit it out of the park yet again. We saw, phenomenal results, and I think what was particularly maybe not surprising but impressive was 75% growth year on year on the data center space. They're still investing, and these are going to, signal good times to come for Nvidia, in our opinion.
Is it a problem long term, a risk, the fact that they depend so heavily on these hyperscalers? They're investing now. What happens after that?
It is a risk. So I think, these hyperscalers are spending billions and billions of dollars on these data centers. But what we haven't seen yet is really solid evidence that the enterprises are adopting, this AI technology. So they've built it. But the question is will they come?
So impressive. There's no doubt about that. How do you explain how the market is reacting? Is this more reflective of kind of the broader existential dread that we've seen with the AI scare sell-off, with the Shery report that's still at play here?
I would say that, the question that we were just talking about is how long is this going to last? How long are the hyperscalers going to be spending, and is it sustainable? So I think that there always have been some jitters about that, and I think that they persist in the market.
What would you like to see in terms of diversification then?
Yes, so this is an interesting question. So GTC, their big conference is coming up in a few weeks. There's going to be a lot of talk about physical AI. So when we get away from data centers, moving into things like robotics, automobiles, drones, connected cameras, all these kinds of things, Nvidia will eventually need to diversify and find a new area for growth. What exactly that is I think the next trillion-dollar question for the industry.
Do you worry about the lack of progress on that crucial Chinese market?
I don't. There's been a lot of tit for tat. It's something that, we always need to keep in the back of our mind because it could resurface at any moment. But I think what we've seen is that Nvidia has been quite savvy in negotiating both with the U.S. government and the Chinese government. So we are pretty optimistic about their prospects in China.
What about competition there? CFO Kress talking about how Chinese competitors are making progress.
So they are making progress. And again, I think that this is something that also always needs to be in our minds for the future. But I still believe, and my company still believes, that the Chinese semiconductor manufacturing industry is still years behind Nvidia.
Marc, take us also through some of their really advanced chips. I mean, we heard a little bit about the upcoming Rubin chips. We were really waiting to see the status of the Blackwell chips as well, because that's what really pressured gross margins in the last quarter. Anything that stood out to you?
I mean, I think what stood out to me is that they're still selling, these products at the same margin. I mean, their margins, because they have really no competition, are still, 75%. And we were expecting that to dip a little bit, but it hasn't. So I think what we're going to be watching very closely is how this evolves over time.
How do you feel about the broader sort of geopolitical trade scenarios that could still yet to be played out?
So yes, as I said, I think that this is something that could resurface at any moment. But as we've seen, there has been negotiation. And, I think a lot of these moves by governments are bargaining chips, no pun intended. But I think, we're not worried in the long term, although there will continue to be tit for tat going on.
We were talking about diversifiers, and I know that you've got some thoughts when it comes to physical tech, robotics, right? And I'm sure you've seen that viral clip from the Spring Gala. Do you think China is really the leadership that we should be watching when it comes to robotics?
Oh, there's no question about that. China makes about 85% of the humanoid robots today. I mean, we have Tesla also in the space, but China is, hands down the leader, and we're expecting quite a lot of growth in that industry in the next few years.
Are there any names that stand out to you? Because, of course, they are receiving a lot of help from the government as well.
Yes, I mean pretty much all of the big humanoid robotics companies are in China. UBTech, Agribot, there are a dozen of them, and we think that there are even more in dark mode. So they're basically all in China, and those are definitely companies to watch. Not many are listed, but we do expect some very interesting IPOs coming up in the next year.
Marc Einstein, good to have you with us, Research Director at Counterpoint with everything Nvidia and, of course, a broader AI sector. Let's actually get more on how tech giants are shifting consumer strategies in anticipation of this widespread adoption of AI. Bloomberg's managing editor for consumer tech, Marc is actually here with me in Tokyo. How long has it been since we saw each other face to face? I think it's been years. Welcome to Japan.
Great place. Thanks for having me. Love it
and
here.
It's great timing because you're actually changing your Power On newsletter into Japanese.
Yeah, we're going to have a Japanese version. First Japanese newsletter at Bloomberg. Our first one being translated from English to Japanese. Apparently people in Japan love Power On and love Apple even more.
Yeah, they love Apple, right? The relationship here in Japan has been so long with that company. But at the same time, Apple is one of those names that haven't really done great when it comes to this AI age. Are they catching up finally?
I don't think they've not done great. I think they've done nothing, I'll be honest with you. And you've seen the market look at Apple as a safe haven in recent weeks. It's like Apple fell backwards into being a safe haven because there's all sorts of markets, roller coasters right now because of AI with Google and Meta and you name it. And so I just want people to be aware that this is not intentional, right? If Apple had it its way, it would be doing great in AI and it would be on that roller coaster also.
They seem to be very much banking on this thing called visual intelligence, really taking in your surroundings. How well are they doing?
That's the differentiator, right? They've really not done a great job in voice. Siri obviously has been a dud. They're trying to fix that in the coming months with this new version of Siri. But this visual intelligence feature, there's a lot here to sort of digest. You can take a picture with your phone right now, and then you use ChatGPT or Google reverse image search to get more information or to see what you're seeing, right? But integrating it into smart glasses, integrating into a necklace, integrating into a wearable pin, integrating into AirPods with cameras gives you a lot more context. For example, you can create visual reminders potentially when Apple rolls this out. You can say, when I'm in the grocery store looking at the pasta aisle, remind me to grab some penne, right? If you are on a walk, instead of it telling you walk 450 feet and then make a right, it could tell you make a right turn by the gray minivan or by the Eiffel Tower or whatever landmark.
Or even what you eat, right? Like what's contained in this,
what ingredients are in here. Or you open up your fridge and you say, look at everything I have in fridge. What can I make? Send a recipe to my phone.
One of the issues and key questions right now is, given all of this investment and the really advance that OpenAI is making, is, for example, if they come into devices and they're coming from, starting from artificial intelligence, and Apple is sort of going backwards when they have the devices, but they're now trying to retrofit everything into their devices.
That's exactly right.
How big of an issue is this?
I think you're spot on actually with the word retrofit, right? They're taking their existing devices and infrastructure and trying to tack on AI on top, whereas the other companies are building AI from the bottom up, right? And it's going to be a difficult challenge. And we've seen how difficult that is, taking the existing Siri infrastructure, for example, and then trying to shoehorn modern LLMs and AI into it. It didn't work. So they spent the last year and a half trying to rebuild Siri from the ground up to make it work. And so that's the challenge they're facing right now.
Marc, it's interesting to me for such a market leader, and we know that Apple's a company where you don't get a product release until it's perfection. Is this a scenario where perfection is getting in the way of progress here? We don't really have that big vision either from the leadership.
Well, there's perfection and then there's working. And I think when this new Siri launches later this year, it's going to be far from perfect, but it should be usable and work at least to an 80% degree. So they're not holding out hope that they're going to have 100% success here on the product. They just need it to work well enough. In the case of the Siri, when they were supposed to launch it a year ago, it wasn't working up to a third of the time, meaning it only worked 2/3 of the time. So that was not a great situation for them. Speaking of products, obviously we should note that next week they're launching a few new things.
I want to say you should also be coming to Australia as well. But besides that point, do you think this is an issue for leadership? Do you think there needs to be sort of a stronger strategy and direction and an outward projection of that from Apple?
It's not exactly clear what their long-term AI strategy is. I think they're still trying to figure it out. Obviously, they're partnering with Google now on the fundamental foundation models. I think visual intelligence is a core part of the overall strategy, but how are they going to be especially differentiated? How are they going to be unique? How are they going to get people to buy their products instead of the competing products because of AI? That's not exactly clear at this point, and it's also not clear if they have the right leadership in place to make that happen. They've taken their software chief, Craig Federighi, someone who has had a long distaste for AI, and they've put him in charge of their AI products. I should note he has now gotten AI religion, so that's not to say he's in charge disliking AI. He likes it now, so we'll see what happens.
And Marc, you mentioned some of those products upcoming from Apple. Could you give us some of a preview of that, but also perhaps if the memory chip shortage and whether that's going to have an impact on pricing going forward?
Yeah, good question. So new products next week. You'll have the iPhone 17e. You'll have this new entry-level low-cost MacBook, which is going to be under $800. So that's going to be pretty nifty. You're also probably going to get some MacBook refreshes and some other new things in the spring, like iPads. Memory price impact on these products, I'm not expecting that.
Marc Gorman, good to have you with us. He's the Bloomberg Managing Editor for Consumer Tech here in Tokyo for us, because we do have a big Bloomberg event coming up, and of course, the launch of the Japanese version of his newsletter, Power On. And also coming up this week, you can hear more about how the memory chip shortage is impacting Asia's AI sector on this month's episode of Bloomberg Tech Asia. That's coming up tomorrow at the times that you can see on the screen.
Top stories that we're tracking in the corporate space. Shery and Salesforce fell in extended trading after the company gave a lukewarm outlook for growth. It sees revenue hitting around $46 billion in the new fiscal year, which was in line with analyst estimates, but still failed to impress investors. The forecast is fueling Wall Street's worries that software giants will lose out to the new competitors in the age of AI. Bloomberg has learned that the Shanghai-based AI startup Step Fund is considering a Hong Kong IPO that may raise about $500 million. Sources tell us that the Tencent-backed company held discussions with prospective advisors about the share sale. They also said that Step Fund could go public as soon as this year, but the size and the timing of the offering may still change. Qantas has posted record first-half profit as it accelerates a major fleet overhaul. The airline is replacing aging domestic jets with new Airbus aircraft, helping drive net earnings up more than 5% to just over $1 billion. Qantas has taken delivery of about 40 new planes so far, with the upgrades boosting Jetstar's profit as well. CEO Vanessa Hudson says travel demand remains strong. And we will be speaking with the CEO later on Insight with Haslinda Amin. You can catch that interview at the times that you can see now on your screen. More ahead on the Asia trade, this is Bloomberg. Well, as investors digest the potential impact of AI and debate whether it will help them or harm existing businesses, a sharp divergence is underway in global equities. While the US gets rattled by AI scare trades, South Korea's stocks, the rally that is, seems unstoppable. A Bloomberg Opinion columnist Shery Ren says this is shattering some long-held investing myths. She joins us now. So what are these myths that are being challenged right now, Shery?
The first one is that the book value is worth something, is now worth something. And the idea is that over the last decade, the U.S. market was by far the world's favorite, right? Like everyone else, all the foreigners are plowing that money into the U.S. stock market. People love it because U.S. has plenty of asset-light software and data financial services companies. They love it because these companies tend to have a lot of recurring revenue. So I can tell, for instance, 2 years down the line, what kind of revenue growth I can expect to have from these software companies. On the other side of the scale, we have North Asia countries from South Korea, Japan to China that have a lot of industrial companies. And these companies tend to be more cyclical. And the people do not like them because, you know, I don't even know what their earnings outlook is going to be like in the next 6 months. So what happens is that the U.S. market has become very expensive and the North Asian markets have become very cheap. The AI scare trade completely turned that around because what we are seeing is that the software companies' recurring revenue may not be recurring. We've seen that with Salesforce earnings overnight, and we've seen that 2 days ago with IBM share prices. On the other side of the scale, what we're seeing in South Korea, for instance, Samsung Electronics and HK Hynix, they say that their orders are completely booked by 2027, going possibly into 2028. So what we are seeing is that these so-called cyclical companies are no longer cyclical, and that's turning the table around.
You talk about two investing paradigms. What's the second myth?
The second myth is that over the last decade, global investors, they don't really like Northeast Asian countries that have very low birth rate. The idea is that, okay, if people are not having babies, there will be labor force shortage, the economic growth will be capped, and also as we get older, we just don't consume as much as young people, right? And that hypothesis is not quite working anymore, because what happens is that countries that have very low birth rate, they have to adopt to robotics and the AI technology much faster. And we're seeing that already. South Korea, followed by China and Japan, they have much higher AI robotics adoption rate than, say, United States or other countries. So if this AI rally is going to continue to go on to the adoption stage, what we'll see is that North Asian industrial powerhouses are going to benefit.
Such an interesting column. Do check out Shery Ren's column. She's our Bloomberg Opinion columnist covering Asia markets. And the title is AI Scare Trade Shattering 2 Investing Myths. And as we're discussing the Korean market being on a tear, and really to do with Samsung and SK Hynix, for example, which had already gained ground in the previous session as well, taking the Kospi above that 6,000 level. And of course, we have now seen it, market caps surpassing that of France, surpassing that of Germany just last month. And you can see at the moment SK Hynix gaining 2% and Samsung Electronics also at the highest level ever, 11 days of gains. This is the longest streak of gains since, 1986 or so. So all of this on a day when we're also contending with the Bank of Korea rate decision. The expectation right now is for no change of 2.5%, really fueled by that economic recovery, which involves, of course, the exports of all of these tech names. Let's bring in our chief correspondent for FX and rates in Asia, Ruth Carson. Ruth, so what will you be watching in today's decision?
Absolutely. For all the macro traders out there, South Korea is often seen as a bit of a bellwether. It's very much seen as a risk-on, risk-off sort of nation when it comes to its assets and tech as well. So with the BOK, Shery, as you pointed out, the expectation is for a hold, which means for all the investors out there looking to bet on the won, it's about the nuance. It's about how,
as you're talking,
what the messaging is going to be.
We're getting the Bank of Korea now breaking, leaving policy rate unchanged at 2.5%, as all 22 economists surveyed by Bloomberg had expected. Of course, we had seen that chip-led recovery. We had seen also a weaker South Korean won, perhaps keeping the central bank on the sidelines. They don't want to pressure the Korean currency even more at a time when we're also seeing rising home prices. We're talking about home prices in Seoul continuing to gain ground. 2026 GDP growth now seen at 2%. That's an upgrade from their 1.8% projection just in August. 2027 GDP growth, though, seen at 1.8%, a slight downgrade from their November forecast. CPI for this year also upgraded to 2.2%, but really inflation has been hanging around the BOK's 2% target for a while. So, Ruth, going back to you, we're seeing the Korean won strengthening a little bit, but as I mentioned earlier, I mean, it's been under significant pressure.
Absolutely. So for all the macro traders out there looking at the won, they'll be going, hang on a minute, you know, you've got a red hot stocks market. And also just the fact that, you know, the won is very often seen as a risk-on, risk-off sort of currency. So for investors, all of the nuance that will come from the press conference will be very much watched. Any sort of policy signaling as well that comes from Governor Rhee's comments on the path forward.
How, I guess, intrinsically tied is the fortunes of the won to what's happening within the tech space? Or do we also see the impact of underlying dollar demand, of what's going on with the yen as well?
there's quite a bit of a tug of war going on here when it comes to the won itself. Because, yes, absolutely right, Haidi, as you pointed out, it should benefit from the tech boom, yet at around 14.24 to the dollar, it is still fairly weak. So we do have that nuance going on of, outflows from the retail investors in Korea towards assets outside of Korea itself. We also have that overhang of that $350 billion pledge from Seoul to invest in the US. That's definitely weighing on investors' minds as well, both locally as well as offshore. So definitely pressure there for the won. Will this continue? Well, according to options traders, yes.
Yeah. Today's action on the Korean won, a little bit of strength, but as you said, Ruth, of course, a lot of structural issues with the currency there. Chief correspondent for FX and rates in Asia. With that reaction to the BOK rate decision to keep the rate steady at 2.5%. This is Bloomberg.
We'll take a look at what we're watching in the tech space, of course, as we head towards the market opens in Taiwan, Hong Kong and mainland China. And of course, all of this is on the Nvidia effect. It's interesting, though, for Nvidia, the stock itself, investors have been given that very tepid reaction to what was really another set of impressive numbers, the upbeat sales forecast in particular. Perhaps this tells us that those concerns about the overheated AI trade will continue to plague not just Nvidia, but the associated space as well. We saw fiscal first quarter sales at about $78 billion, really pretty bullish around across the board there. Still, though, some concerns about the run-up in AI spending isn't sustainable. Not a lot of clarity on that China strategy there as well. So perhaps enough to ease the angst in AI rather than wipe it out completely. That is it for the Asia trade. Our markets coverage continues with the start of trading in Hong Kong, Shanghai and Shenzhen.